probably have much higher to go in the cycle. I'd expect 150, 200K, hopefully. I mean, Bitcoin standard's like the GOAT of the space. Keep it simple. Don't overcomplicate it. Um, Always be aware of your volatility limitations. If you find yourself awake at night because your position's too big, then maybe your position's too big. And you ironically could end up with more Bitcoin with a smaller position if it means you don't make mistakes with your position.
Lyn Alden discusses Bitcoin's expected price movement, forecasting a rise into the low six-figure range. While Bitcoin has already touched these levels briefly, she expects further consolidation and eventual growth. She emphasizes that the current cycle may be longer than previous ones, with less explosive price surges but sustained upward momentum. Alden expects Bitcoin to reach a range of $150,000 to $200,000, but the timing remains uncertain. She highlights that the trajectory depends on whether Bitcoin moves rapidly to these levels in a short span, or if it gradually builds support over a longer period.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think we'll see, low six figures. We've already touched it, but I mean, like further into the low six figures, like some of the early numbers you referenced, with the caveat that, there are various big Boolean outcomes that can happen that can drive you to much higher prices in a shorter period of time. I tend to expect this cycle to probably be a little longer than average. That's kind of where my current view is. If you asked me a year ago, I would have said maybe not, but currently I'm thinking that this cycle might be a little longer, and that maybe the trade-off is that it's less explosive in any given part of that. And so, some of the numbers you referenced, maybe we'll see it this year, maybe we see it next year. I think as we've kind of shifted more toward fiscal dominance, you could have a more sustained, longer running issue. Like watching gold, if you look at the gold over TLT chart, so gold over long duration treasuries, it's just been grinding up for like so long. And even there are periods where gold kind of pauses, but then treasuries kept falling. So that ratio was like surprisingly smooth and upward. Bitcoin could kind of surprise to the upside, not in terms of like explosive magnitude, but in terms of just like how long it goes this time. Even that's not a high conviction view. I mean, anything can happen. I kind of look at it just over time. I kind of think, okay, well, do we have danger signs yet? And I look at various indicators like, market capitalization compared to on-chain cost basis. Is that extraordinarily high levels? No, it's kind of looks like the mid cycles looked in prior cycles. I look at things like the HODL wave, how much, whenever there's a bull market, it convinces some old hands to sell their coins. And either maybe they're rebalancing, maybe they're upping their lifestyle. But either way, that they're having a lot of exit liquidity, and they're taking it. So far, this HODL wave has been smaller than prior cycle endings, meaning that the price action's not been enough to get a similar amount of coins to rotate to new hands, as we saw in prior cycles. Doesn't mean every cycle has to be the same, but in general, I think we probably have much higher to go in the cycle. I'd expect 150, 200K, hopefully. And then when we hit those levels, I'd have to see, well, what does it look like? I mean, if you go there in 6 weeks and the market cap compared to the on-chain cost basis is now like super high ratio, I'd be okay, this is looking kind of dangerous now. Whereas if we see that figure in 18 months and we've seen the cost basis go up and it's been this more orderly incline upward, then I might be more bullish and say, well, maybe I think we still have higher to go. So I generally agree with the way you phrased it, which is kind of conservative targets, which is funny when you hear conservative, because it's like, I mean, calling for a double in the next couple of years is like conservative in Bitcoin terms, but that'd be amazing for any other asset. With then caveats that, sure, I mean, as a scarce asset, and as something that big governments can change their opinions on, then sure, you can have far more explosive actions. Well, I think that's the trend that's kind of finally taking off a little bit. That didn't really take off in the last cycle. So MicroStrategy would hold conferences, and no one was really joining them. And I think because of some of the accounting cleanups that happened, as well as just going through a full another cycle, and seeing one company really disproportionately benefit, like the only company that kept up with NVIDIA in terms of performance, um, it makes sense that other companies are doing the same. Um, and so I think it is good that we're finally seeing, multiple companies in multiple countries adopt this. I think it's going to continue. And I wrote a piece about this to point out that there's actually a really big gap between Bitcoin and any other asset they could hold as a treasury asset. So any asset that underperforms like the cost of capital for equities, meaning basically expected equity return, which you can in the US you can benchmark as the S&P 500. If you have an asset that you expect to underperform the S&P 500, you can really only hold so much of it. And so gold has historically underperformed, not by a lot, but by some, and it's kind of by the amount equal to its debasement rate, which is for gold like 1.5% a year. And Bitcoin can basically, if you kind of take gold and you take out the debasement rate, that can kind of keep up with equities. But then Bitcoin has additional kicker that many of us view it as still early. So it's nowhere near its total addressable market. So it has still to go this period of heightened growth before it reaches whatever its kind of total addressable market is. At that point, it will probably go up with debasement. And so companies realize it's a cheat code. It's basically something they can do to say, look, our income, we can only do so much with our income. We're not Microsoft, but instead of just holding money in treasuries or buying back shares and just kind of slowly melting, we can buy something that realistically could go up 10x in a time frame that matters for our investors, and it could change the scope of the company and kind of end that slow melting that many value stocks have. So I think that trend has legs to it. I think it makes sense.
Alden provides insights into how Bitcoin fits within traditional investment portfolios. Historically, diversified portfolios allocate small percentages to various asset classes, with equities and bonds taking the largest shares. Over the years, Alden has advocated for replacing some bond exposure with gold, given her bearish outlook on fixed income assets. Similarly, she suggests allocating a portion of equity exposure to Bitcoin, as it has historically outperformed most stocks over long time frames.
As far as versus individuals, I don't think there's a big difference. I think what both camps have to do is say, because this is a volatile asset, I can only put enough into it that I'm fairly sure I won't have to sell for 5+ years. So you don't want to be caught putting everything into it and then, it's this bear market and I lost some income and now I have to sell some Bitcoin at a lower price than I bought it. That's a mess. So you have to balance your bullishness with your volatility expectations and your cash flow expectations. And that's true for both households, companies, and maybe to a lesser extent governments, but basically any sort of private entity has similar things. The only thing is that the bigger of an organization you get, the harder it is to actually implement that strategy, because you have to get more people to agree. So a household, one or two people can make the call. Small business, sometimes one or two people can make the call, or a few people. A publicly traded company, but where the founder is still running it and owns a lot of it, that's, again, you can make a pretty decisive decision. But when you have like a really broad decision set, it just makes it harder to get done. I mean, Bitcoin Standard's like the GOAT of the space. If you're getting into yourself or you're getting someone else into it, tone matters. So like there are authors that are more, I guess, assertive or aggressive in how they phrase things, and authors that are more like, cautious in how they phrase things, and those can work for very different audiences. So whether or not you're trying to reach like an institutional audience versus like a blue collar audience, it could be quite different. And so I think that one is find someone who sounds like they make sense and read whatever their core pieces are on the subject. But I think the ones you mentioned are kind of some of the go-tos currently. And then I think a lot of it is just don't overcomplicate it. So like everyone thinks, well, I got into Bitcoin, what can I get into next? And then that's when they get into like trying to trade like meme coins around, or they get into leverage that is probably over their head, or they just kind of like keep it simple, don't overcomplicate it. always be aware of your volatility limitations. If you find yourself awake at night because your position's too big, then maybe your position's too big, and you ironically could end up with more Bitcoin with a smaller position if it means you don't make mistakes with your position. You know, if you end up having to sell at the wrong time, that's worse than having bought a little bit less and just letting it run. And so I think just educate yourself, go slow, try to learn from different sources. If you see people that disagree with each other or that disagree with you that sound rational, lean into that, explore where the different points of disagreement are rather than kind of stick in your own echo chamber. So seek out steelman or seek out devil's advocate argument against whatever your position might be and make sure you're fully comfortable with it. Quote unquote traditional portfolio is super diversified. The biggest slice might be 20% in the S&P 500. But then if you look and say, well, what is that in any one stock? It's a few percent, even for the biggest. And so, 1, 2, 3, 4, 5% is all relatively meaningful. In one thing I do in my research publications is I have some model portfolios that are kind of they're traditional portfolios with a slight tweak to them. And one thing I've generally done is say at the bond side, because I've been bearish on bonds for like 5 years, they say, well, let's take out some of the bonds and put it in gold for like a similar volatility profile, but better. And then I said, well, for some of the equities, let's take some equity chunk and put it into Bitcoin, because they did research on Bitcoin and decided this is a high probability network to keep appreciating in value. And it's outperformed most equities. And so that's the approach I've taken. And I've done higher than that BlackRock figure. But for example, the number that I put in a quote unquote traditional portfolio is different than my own personal number. As someone who's immersed in the ecosystem, has written a book that's partially on the subject, I'm comfortable, and in my age, I'm comfortable with a fairly high allocation. In addition, when it appreciates and you just don't sell, that can just automatically give you much higher allocation. It doesn't mean you put that much in to begin with, or that much of a percentage in to begin with. So I think that we start with the basics of get off zero, and then have it more normal for portfolios to have a Bitcoin slice, and it could be 1, 2, 3, 4, 5%. But when you look at the sheer size of the capital involved, that's actually huge. Now the counter argument is, and this is something like say Michael Saylor would argue, if you're going to put 2% of your portfolio in, like, what's the point? Like, how many other high conviction investments are you going to get? So I would say that the quote unquote the traditional portfolio is kind of like when you're not conviction about anything. It's like you have no views of the future, and you just kind of say, oh, I want stocks and bonds and gold and Bitcoin and foreign stocks and all mixed up together. When someone puts 100 hours into something and says, you know what, I think, so this is 10 years ago, you think Apple stock's going to do amazing. I want to own Apple. Or you look at Bitcoin, you say, you know what, I think Bitcoin still is one of the best bets over the next 5-10 years. I want to over allocate to it. That's the approach that I take. But that's not the traditional equity, but the traditional portfolio view. So I think that small allocation in a traditional portfolio as a baseline makes sense, and then dial it up if you actually have conviction.
Alden contrasts the passive approach of traditional diversification with a conviction-driven strategy. She acknowledges that while a standard portfolio may hold small Bitcoin allocations, investors who have dedicated significant time to understanding Bitcoin's fundamentals may choose to allocate more aggressively. This is especially relevant for those who recognize Bitcoin's potential as a long-term store of value and inflation hedge. Please like and subscribe.